along with his PowerPoint. So if you miss anything, no worries. I will make it available to you guys by the end of the day. All right, Gary, thanks for being here. It's all yours.
All right. So I want to make sure everybody sees my screen.
Not yet.
Not yet. Great. Let me do something different here.
All right, awesome.
Are you seeing it now?
Yes, sir. You're all good.
All right.
Thank you.
So just briefly, I'm a business consultant here at BBSI, and while we offer a wide range of services for small and medium-sized business, I tend to engage more on finance, technology, management strategy, and succession planning, all the way up through acquisition and expansion. So that's a little bit of my role here at BBSI. I spent a good amount of time looking at the ERTC, looking at the PPP. I feel an obligation, if you will, beyond BBSI clients to just do what I can to assist any small or medium-sized business in the area, because I know y'all have been beaten down pretty dramatically since March 17th of last year. My goal today is to provide you some information, and probably more importantly, remove some of the uncertainty about the program. I do want to answer questions as we go through, and then at the end, we'll stop again and have a further Q&A. And then finally, regardless whether you're a BBSI client, if you need assistance on any of this, Monique, has my contact information, and you are welcome to reach out to me directly. So with that, I'll start. There's going to be two pieces to this. One is the retroactive 2020 employee retention credit. And then every time I do this, I have to use the term latest updates on 2021, because as of last week, there are additional updates to 2021. Some of these are pending legislation, and we'll talk a little bit about as we go through. So this is really short and to the point. Do I qualify? What are the limits? What's your mechanism for submitting? And then how do I receive the credit? I think I saw a question already regarding nonprofits, and the answer is yes, nonprofits are also eligible. We'd need to look at your specific situation and go through the actual criteria for nonprofits. They are in fact eligible. So for 2020, did you have less than 100 FTEs? That's not as straightforward as it might sound. Some companies may have 130 or 140 people that work for them. It's really defined as having less than 100 persons working 30 hours per week. So you can't just say I had 115 or 120 people and all of a sudden be excluded from it, because that's not how it's actually defined. And again, these are the original rollouts for 2020. Did your business realize a 50% or more decline in gross receipts, cash or accrual, depending on what your company runs as its normal accounting procedure, in any quarter of 2020 in comparison to that exact same quarter in 2019? So if you meet those criteria, then you qualify wages and qualified healthcare costs, except for any wages utilized for PPP forgiveness. This changes a little bit as we go forward, but that's the 2020 baseline. Are there any questions at that point? Okay. So there's another piece to 2020, and this one is this is nuanced, but it's actually an opportunity where a lot of clients have found that they are in fact eligible for the 2020 retroactive ERC. So first off, did you have OASDI wages or Social Security wages for people who are unable to perform work specifically due to a local, state, or federal order, including but not limited to the SIPOs, shelter in place orders of March and December of 2020? If yes, then even you can qualify even if you have 100 FTEs or more. The thing to keep in mind here is it has to be related specifically to an order that was issued. It can't be that people put off a program because of the timing, they didn't have money. It has to be specifically related to the shelter in place order. The best way to look at that in terms of opportunity, on March 18th, for about 6 weeks, anybody that was deemed non-essential was unable to work. Any of those wages that you paid during those 6 weeks, and again, assuming that you were deemed non-essential, all of those wages can be used for the ERTC. There's another piece to this, and this is where it gets a little bit more nuanced, but in the IRS guidelines, they utilize the term nominal impact. They also then define nominal impact as 10%. So what that really means is and this is by employee, this is not at a global level, but by employee was a worker unable to perform at 90% capacity, specifically due to a local, state, or federal order. And for example, if you have salespeople, they were unable to go meet face-to-face for most of the year. So the vast majority of their wages that wouldn't be included in the PPP forgiveness, so once you max out your PPP forgiveness, those wages for those salespeople would in fact be eligible for the ERC. There's a lot more to that discussion. And as I mentioned earlier, I'm happy to have more of that discussion with you. We also have a partner we work with that is an absolute expert in the process of looking at the 2020 ERC retroactively. Any questions at that point? Okay. Do I qualify? First thing to remember, and this is, so in 2020, let me stop here for just one more moment. If you qualify in a quarter, you qualify for the year. So you don't have to re-qualify every quarter. If you qualify in Q3, you qualify in Q3 and Q4. A maximum credit is $5,000 per employee, and that's 50% of their OASDI wages. So if they receive $10,000 in OASDI wages in a quarter or $5,000 in 2 quarters, then you'll be able to maximize your ERC at $5,000 for the employee in 1, 2, or 3 quarters. In a lot of cases, those first 6 weeks actually, in fact, maximize your ERC for the year. The other thing to remember, up until December 27th of 2020, if you got a PPP, you were not eligible for an ERC. On December 27th, 2020, with the new CARES Act expansion, that changed and you're eligible for both the PPP and the ERC, but you can't utilize the wages of the forgiveness for the wages of the ERC. So in 2021, the latest guidance, and this is important to remember, you qualify in 2-quarter increments. If you qualify in Q1, you qualify for Q2. If you qualify in Q2, you automatically qualify in Q3. But your max per quarter is per employee. The other change that was made is it's now a 20% decline in gross receipts, but it's still compared to 2019. So you'd look at Q1 of 2021 versus Q1 of 2019, again, looking at gross receipts decline. And gross receipts are generally considered total income plus cost of goods sold. And if you have a 20% or more decline in Q1 over Q1, you're eligible, but you also then automatically qualify for Q2. This guidance right here is now on hold. 2021 is expanded to include Q3. However, the current pending legislation regarding the infrastructure bill, if it were to pass as is, would eliminate Q4 from the equation for the ERC. So 2021 also had another change, and that is it moved from OASDI wages, Medicare wages, and pay increases are no longer excluded. Again, no wages used for the PPP forgiveness are eligible for the program, and no wages paid under FFCRA. So if you paid COVID-19 sick pay, that needs to be excluded as well. If you do utilize R&D credits, there are additional limitations, and we can talk about that if anyone wants to have a further discussion. So we've already gone through a lot of this. Bottom line is you're going to see a lot of emails where people are telling you, I can get you $33,000 per employee. It's a great marketing gimmick. But the fact is it's principally not true unless you were completely shut down in 2020 and you're still suffering in 2021 to a great effect. So don't be fooled by that. Don't necessarily sign up for the 25 or 30% that they're going to charge you. There's a lot of ways to do this where there wouldn't be fees, and there are some wages, especially for 2020. That's where you might want to look and bring on a professional, but we can get your situation in order before you go to see a professional. What are the mechanics? It's really simple. Once your eligibility is determined and agreed, you calculate the amount of the credit. If your credit is retroactive to 2020, or at this point, Q1 of 2021, or if you filed for Q2, then your accountant would then file an amended 941. It's referred to as a 941X. You do not do anything but place a number. What you're really setting yourself up for and what you want to do is build this around the idea of a self-audit, because there's no guideline from the IRS in terms of what they want. You don't submit payroll information. All you do is put a number in and the IRS processes it, and then they send you out a check. That's literally how simple it is. They did in Q1 of 2021, towards the end of 2021, they expanded the window of time for an audit from 2 years to 5 years. It's still not the likelihood of an audit for the ERTC, but what could happen is if you get an audit for something else, they'll look at the ERTC. So you do want to follow the guidelines as closely as you possibly can. Once you put in your 941X, the IRS processes it, and you're literally done at that point. If you were working with a PEO, they'll file all of this on your behalf, and then they return the funds to your account once the credit is processed. There is no application, and it's not a loan. So you're not looking to have to pay it back. It's just it's a tax credit. It's what I refer to it as a clawback provision. So you're clawing back taxes that you've already paid. There's some additional information, and we'll go into that here in just a moment. What I do want to do is stop here for some questions if there's any out there.
Hey, Gary, yeah, there's a few. Can you clarify what has changed in regards to 2020?
So 2020, you maxed out at $5,000 per employee for the year. It was 50% of the first $10,000 in wages, and they used Social Security wages. And you qualified for the year once you qualified. So any quarter in 2020 where you qualified, from that point forward, you qualified for the year. The other, and as I mentioned earlier, the big opportunity for a lot of companies is looking at that 6-week window after March 18th, where if you were non-essential, then in fact, most of those wages, if not all of those wages, would be eligible for the ERC.
Okay. Also, folks, did disable the mute. So if you wanted to just unmute yourself and ask Gary directly, feel free to do so. I'll just roll down. Do we need documentation indicating that there was a government order? And if so, what documentation is needed?
What you need to do is have that documentation for yourself. You're not required to present that documentation. The documentation is actually pretty straightforward. Whatever county or city you are working in, they will have issued orders, shelter in place, regardless of what the order is. In many cases, it just defined that you couldn't meet indoors. So again, going back to the concept of an outside salesperson, they were limited more than 90% of their capacity, and at that less than 90% of their capacity, and therefore their wages, generally speaking, that weren't used for PPP forgiveness would in fact be eligible for the retroactive 2020.
Gotcha. Okay. If you were given PPP forgiveness, would you not qualify?
Has nothing to, so the only thing you want to do on the PPP, it has nothing to do with it, quite frankly. What you want to do is, if you're going to apply for the ERTC and you received a draw to PPP, there's a misconception on the payroll protection program, and that is that somehow the IRS cares how you spent the money. They really don't. It's all about how you allocate your wages or your expenses. So you can allocate your wages across a broader period of time. What I've done with every client, and you know, one of the things that I didn't do, and I'll talk to results here for a moment because I think they're important. About 20 clients that I'm the lead on, we clawed back over $5 million in ERTC over the course of Q1 and Q2. And right now we anticipate about another $2 million for Q3. So there's results associated with this. This isn't, this isn't something that people aren't getting. It's something people are getting, including people that are within your own organization. So what you want to do is, if you got the PPP draw to, you want to use the 24-week window, because that allows you to allocate everything across 24 weeks, as opposed to compartmentalizing it into 8, which limits your ability to maximize your ERC. So the idea behind the 24 weeks is we can look at it and we can maximize your ERC while also making sure that we use as much wages as possible for the PPP forgiveness.
Can you speak to strategy for balancing PPP, ERTC, FFCRA?
So there's really, I guess what I kind of went through just a minute ago is what you want to do. The PPP is a separate entity, and I want to make sure that we continue to draw that distinction. You can get the PPP and the ERC. The key is that you can't use the wages for forgiveness on the PPP with the ERC. And that goes back to the 24-week allocation versus locking it into 8 weeks. And I know a lot of people think of it, well, I don't really want the government in my business for 24 weeks. But if you think about it another way, they're not really in your business per se. But what you're doing is you're regaining taxes that you've already paid, that the government's already taken from you. This isn't a loan. There's no application. There's really almost no documentation required. So from that perspective, there's really no strategy. You just have to make sure that when you do the ERC, you don't include FFCRA wages or PPP forgiveness wages. And using 24 weeks typically allows you to maximize the potential of both.
If closed due to a government order, do we still need to qualify by decline in gross receipts?
No. So if you were closed, that's the whole point of if you have that 6-week window or that 8-week window where you were completely shut down, any wages you paid during that time are specifically eligible for the ERC retroactive to 2020. What I do want to make sure that I say here, in terms of timeline, from the date that you file your original 941, you have 3 years to file an amended 941. Or you have 2 years from the date that you actually pay on that tax to file. So the window has not it's not anywhere near being closed. You have significant opportunity to go back and claw back these taxes that the government's taken from you.
Does the Restaurant Revitalization Fund impact the ERTC?
It does. You have to really go through, and that's where, like I said, we have a partner who could look at that for you. And that's something I'm not as familiar with, the Restaurant Revitalization Act. There's also a shuttered venue clause. Those types of things I really didn't include in this. I don't have enough expertise, mainly because I don't have enough clients in those marketplaces. But I certainly can get you in touch with somebody who knows pretty much this entire program regarding those two particular efforts.
Hey, Gary, this is Tim. I've got a quick question for you. Q4 currently is in play. We're not sure if it's going to be there or not.
Right.
But assuming it was going to be there, are there strategies companies might want to look at or employ in Q3 that would be helpful?
Yeah, and I that's an excellent question, Tim. So the IRS gave us a set of guidelines. And as I mentioned to Monique very early on, the IRS does not prosecute based on the spirit of the law. They prosecute based on the letter of the law. And so the letter of the law actually benefits us in this particular case, because if we sit down, and I've got about a dozen clients that I'm working with right now, and start working on some cash strategies, for lack of a better term, we can create eligibility in Q3. And if we create eligibility in Q3, that in and of itself is a significant milestone. But assuming that somehow the infrastructure bill is changed and ERTC is still available in Q4, that would mean that you're getting Q3 and Q4 regardless of what happens in Q4. In some clients' cases, that's literally $1 million decision to sit down and go through those numbers. And as I mentioned, I have about a dozen clients that I'm working specifically on with that. And those are things where, you know, there's some best practices that I can share and that type of thing. So thank you for that question, Tim. Mm-hmm. I will say this on Q3, the sooner the better. If you wait too late into Q3 to start trying to implement cash strategies, it makes it very difficult, and it starts to call into question what you're actually trying to do.
I just have two more questions. One, yes, the slides will be available and emailed out. And I don't know if you, Tim, or Gary can answer this. Will this webinar qualify for CPE hours?
Oh, I have no idea.
It's not registered in any way to be a CPE. Yeah. One thing I wanted to clarify as well. Some of this, I mean, for people, especially hearing this for the first time, it sounds like a Rubik's Cube. And to some extent it is, but it can be broken down with somebody that knows how to walk you through it. And it can be very, very much simplified. And then the other aspect is that, and Gary mentioned it, your likelihood of getting audited is not great, but I'm a former CPA. And so I always do things assuming I'm going to get audited. It's just a best practice. You just tidy up your records, you have everything in place. And even if you're audited and you might be off here and there, the effort and documentation and preparation gives you a lot of plus side with the IRS. And it's just good rigor from a business standpoint to go through. It's not a heavy burden. And if you do it on the front end, then if whatever, 2 years down the road, somebody asks you, you go, oh, that's right, I got this file over here with all the stuff in it. And you're not scrambling.
Yeah, and I do want to, it's what we talked about isn't magic. There's nothing particularly complicated. The difference is that I don't have the burdens of a business owner or a senior manager in a business, because when you take all of that and add this onto it, it becomes overwhelming. And what I try to do is just remove the fear, which typically creates the uncertainty. And so being able to have that third party, view of things, there's no financial incentive for me to get people money. There's nothing associated with that. This is literally something that from day one, I decided I was going to immerse myself in and try and help every small business or medium-sized business that I possibly could, because I just, like I said, you guys have been beaten down for the last, what, it's now 17 months. And, this is our way of giving back to the community, if you will.
Well, thank you. And I just saw one question come in. So 5K max for 2020 and 28,000 max for 2021.
Yeah, 5,000 for 2020 and 28,000 for 2021. In one case, in 2020, if you qualify in one quarter, you qualify for the year. In 2021, you qualify by quarter. But if you qualify in one quarter, you qualify for the subsequent quarter. But auto qualification does not mean that you qualify for the following quarter. So you literally qualify by quarter. And every time you qualify for a 6-month window.
That was all I have in the chat. Does anyone else have any other questions? Again, you're able to unmute yourself if you would rather speak than type.
I would just like to add one thing, Monique, in that Gary's taken a tremendous lead for BBSI in our area in this field, and we've also propagated that to more businesses. But I can tell you that Gary mentioned about some of the apprehension, the confusion. There's been so many things that have been put out there, and we've literally talked a number of business owners into taking a harder look at this, and the amount of money they've gotten has been game changers for their businesses. And so we know a lot of people have fatigue with COVID, fatigue with how many changes to the change do we have. And but if you can just take a little bit of time to dial in, sometimes it can be very beneficial and can really help you in many ways. I mean, there's been a lot of millions of dollars that have been recouped. And again, not to be paid back at all. It's you're getting back taxes you paid, or in the PPP loan case, getting forgiveness. I know Gary helped one of our clients get a $3 million complete forgiveness on a PPP loan. And I mean, it's interesting. So it's relative scale. If your business is smaller, you're not going to have 3 million laying out there, but it's relative scale but it's always helpful.
Yeah. I called him an angel earlier, and Gary and everyone on here, we booked him for the whole hour. So please ask any questions you'd like. Actually, we have one. Will focusing just on ERTC and not paying down the PPP loan be a best practice strategy in some businesses? Should employers factor in like cash flow, how big their loan is, and what the net saving would be, if any, given the potential consequences of using credits?
Yeah, there's actual. So first off, if you utilize credit, that's going to come under your gross receipts. So that's not necessarily a great option. What I would tell you is that within the PPP forgiveness, you're only forced to utilize 60% of the PPP for wages. So anything beyond 60% of the wages for PPP, you can allow for, assuming you've got the other expenses covered, the other 40%, you can utilize for the ERC. Where that can really come into play is you think about an owner. An owner's wages associated with the PPP can be, or actually anybody's, high value individuals. Over the course of 24 weeks, you can utilize $46,000 for PPP forgiveness for anybody who makes over $100,000 a year. So that can really change the landscape for you as far as being able to then maximize the ERC. Remember, the ERC is by quarter. So anytime you pay an employee $10,000 in Medicare wages in a quarter, and that's Medicare wages. So, vacation, all of those types of things are included. Then you can maximize them out at $7,000 per employee. And then what we do is, and it was a really good question. I've actually created a spreadsheet that I use with clients where we go through and we plug in the data and we figure out what can we do with regards to wages and how can we maximize the ERC. Sometimes we don't go for the full $7,000 on the ERC because we do need a few more, we need wages in the PPP forgiveness. I had one client who unfortunately, before they talked to me, submitted their PPP draw 2 in 8 weeks. And we were still able to get them some money, but we were dramatically limited. And that's why I say, if you do have a PPP draw too, that's where you can really sit down and go through the details and figure out how can we maximize both? How can we maximize the ERC, but also how can we utilize as much wages as possible to eliminate chasing down miscellaneous invoices for the PPP forgiveness?
Did you clarify if part-time employee payroll is eligible?
As long as they're W-2 employees, they're eligible.
We've been noting the credit on each payroll as a line item. Is that step unnecessary? Is the 941 form the only place it's needed?
The 941 form is the only place that it's required. Again, to Tim's point, and what I was trying to say earlier, I would set myself up for a self-audit. I would make sure that I was comfortable with all the information that I was gathering and the position I could take if somebody walked in the building. But in terms of what's required for the IRS, it's a number, literally a number from your accountant or your tax accountant, your CPA.
We process payroll with Paycor. Do you suggest that we keep ERTC calculation turned on until we know for sure we no longer qualify for ERC?
I'm not familiar with their program, but yeah, I would do that. But again, what I would strongly urge people on this webinar to consider is, are there strategies that you could implement almost today that would allow you to create eligibility for Q3? You know, the letter of the law is very clear, and the letter of the law says gross receipts. It doesn't say profit and loss. It doesn't say a lot of things. It says gross receipts. It defines gross receipts. So if you have the ability to manage cash, you have a specific opportunity to make yourself eligible in Q3. If the infrastructure bill changes at all and the ERC is brought back for Q4, that means you're qualifying for Q3 and Q4, and that would be what I would consider to be a best practice.
Great. Were there any other questions? All right, Gary, anything else for us? Tim, anything else?
It was a privilege to be able to talk to y'all today. I hope that I was able to clear up some things. I probably created some additional questions, and feel free to reach out to Monique and gain my direct contact information. I'll be happy to work with anyone. There's no obligation to BBSI. Again, thank you all very much for having us today.
No, thank you. And thank you, Tim. Thank you both so much. And everyone logged on. Yes, I will send out slides, copy of the recording, and also Gary's contact. Thank you for that, Gary. That's a huge offer. So
No worries.
thank you. Well, everyone have a great rest of your day and stay safe.
All right.
Thanks, Monique.
Thanks.
Thanks. Bye.